Now. You should be able to hear me now. Finally. This is not a professional operation. Not at all. Nope, can't hear. Yeah, no, you should be able to hear me. Can ya? Now? Now it should be fine. Okay? We finally got it. We got it. All right. So now I can actually go and post, hopefully, to the Discord, because it's probably just you and I for now. I wanted to make a joke and make fun of how YouTube, Google, and all that crap don't like Israel. Like, I really want to make that joke. But there's an over sort of there's a layer on top of it all that makes it extra funny, particularly right now for me. And like, I know YouTube will not recommend my video to anyone. Even some of my members are not being recommended, unfortunately. So we're gonna take a little while until we get there with the everybody's joining and all that. Give me a sec. I'm gonna post that I'm live. Let's go to the Discord. By the way, Discord, shout out to all the Discord members. All right. And we're going to give them obviously a couple of minutes. So, Casey, hope you're doing well, having a good evening. Arnon, wow. Shit, I knew it. Why did I know it's going to have, like, there's a game today? Well, there's a game probably every other day right now, right? Isn't there, Arnon? Yeah, fuck, I didn't think about it. Yeah. But hey, I mean, at least I get to hang out with you guys. It doesn't matter. Probably, bro, you know that in this stream it's gonna be you, me, Casey, and like 4 other people. So I'm not worried. I'm not worried at all. Not only today, yeah, every day now, right? No, wait. You mean just today there's a game and that's it? And I just chose to be an idiot today? But anyway, it doesn't matter. Let's go. You know what, bro? 30 minutes is a crap ton of time. I'm just happy to see you around because I haven't got to hang out with you in a while. And let's go over the analysis. Let's go over the S&P, what we're seeing, price action, and all that sort of boring stuff. You know, all jokes aside. So, as you guys know, we are here to look at the technical facets of things. We can talk about yesterday's CPI and how it seemingly presents a narrative of decreasing inflation. Do I believe it? No, I don't. Believe it or not, I am a consumer just like anyone and everyone else, and it does not feel like inflation came down. If anything, it got worse. Pretty much, just depending on the sort of line of products we're looking at, but generally speaking, inflation definitely didn't get any better. It's pretty much the same. And cumulatively, year over year, if you're looking, the percentage doesn't make any sense. I believe that is some level of manipulation in terms of what is considered and what is the percentile of consideration. War-wise, nothing has changed. I just know that some people like feel like nothing has changed. You know, they look outside the window, they don't see a war, and they're like, well, it's probably not that serious. Gasoline prices, decreased a little bit, and so people are thinking things are getting better when, well, they're really not. Let's be honest. And oil prices, of course, temporarily, it's a natural fluctuation if you know the cyclicality, and know just a little bit of technical analysis. Shout out to my community members who actually learn and know about these things. And those who want to learn and become truly independent, their own analysts, instead of relying on talking heads on Bloomberg, Fox News, and so on and so on. But you get the idea. Pretty much become your own independent processor of what is happening in the market to understand. Give me a second. Hold on, boys and girls. Right. Um, okay, cool. So let's go over this real quick while we have time. I mean, 30 minutes, like we said, longest time. So my expectation was, just to kind of summarize this real quick, is that for now, by now, we should have seen a little bit more bearish price action. Basically, pretty much this very same limb that we're processing or going through right now, but a little lower, kind of within that vicinity of 7,200, 7,100-ish, give or take. And so it seems right now we're moving more so sideways. That kind of puts into question the whole idea whether the shoulder was solidified here or whether the actual shoulder mark is right there. Really, on the grand scheme of things, you'll see none of this really matters. For example, if we're looking right now on a 5-minute chart and we're looking at the momentum as is right now, it looks a little bit more on the bearish side. And it seems like we're far more likely to continue seeing a little bit more bearishness throughout the price action of the following, let's say, what, hour and a half that we have left. And more so into tomorrow, but nothing significant. Good, let's go to 30 minutes. 30 minutes still shows that we are revolving or involved probably within that triangle that we have right here with this major resistance level that we've established from before. It's a basically a top or a gap, if I recall correctly. No, it's a gap, right? It's a gap we've established before, so it's 75 84.32. There is likelihood of testing some of these levels into that wedge-like formation, given how we have still bullish price action, bullish momentum, and so can anticipate bullish price action, let's say into tomorrow, since we're pretty much at the end of the session and we're looking at half-an-hour candlesticks, half-hour increments. That means, for those who don't know, each and every candlestick represents a 30-minute increment, half an hour. In other words, since we're left only with about 2 of them and a little bit, there is not a lot to go by on today's price action probably, but it's more so looking into tomorrow or overnight, depending, of course, whether this momentum will play out or will persist through nighttime. Bullish on the 45 minutes, but are we really bullish? We are more so bullish in bearish territory, corrective. Although, because we haven't really penetrated into bearish territory beyond that 50 range on the stochastic RSI right here, as you can see in the layout right above me, and kind of figure out how stochastic RSI functions. So we're not going to waste time on that every single video I make. And so this appears to be a little bit more bullish, does kind of confirm the idea of retesting that high before breaking down lower. Why do we think we're even going to go move lower? I mean, Greg, the hourly is going higher. Leo, hi, good to see you, brother. So it appears to be that we're kind of bullish. Why even assess that we're going to break down and move into any wedge-like formation? Well, the real caveat appears right here on the daily, something I've been warning about for a handful of days now, that eventually this momentum will run out and will start moving downwards. So what we're seeing on the smaller time frames, it's more so the entanglement and the processes that we're going to have in the following session or so, roughly around the ceiling itself. So we kind of are running out of momentum, as we can see on a broader picture, and we're going to see that even on the weekly, it appears to be even more so bearish than bullish. But let's see again what the weekly shows, and something again I've been warning about for some time now. Although we saw some potential convergence, or the forces, the moving averages, rather, the lines that represent these forces, the moving averages, that end up being our, well, as we call them, our K and our D, as they end up representing more so bullish and more so bearish momentum. As we can see, we are now D dominant. Basically, the red line is dominant, representative of bearish momentum. Now we can see the divergence took hold of the lines, basically, and we're now moving rapidly downwards, which signifies, or rather shows, this is an indicator, it's indicative of increasing bearish momentum. In this case, it is, if you look at the growing divergence between the two forces, you can also analyze and understand that basically the bearish momentum is decreasing faster, supposedly, as we can see from here, although the price action seems to be more so sideways than anything else. Why is that? That is because we're now still moving downwards above the 50 range, meaning in more so bullish-like directionality. Although this entire center area is considered to be more neutral than anything, whether we are above a 50 or below 50, that still signifies and implies the idea whether we're more so bullish or more so bearish. So since we are now in a combination of the forces, or so to speak, bearish but still in bullish territory, we are having significant decrease in momentum. That's why this candlestick in fact flattened out the curvature of the process instead of keeping it moving higher and higher and establishing a higher high. So as you can see, we now are kind of breaking inwards. It still looks like a funnel-like structure on the smaller time frames. Irregardless, when we're looking at the weekly, what we can establish from that is that we're slowly starting to deteriorate in the broader picture of things. And as we continue to deteriorate, the more bearish momentum takes hold of the price action, eventually we'll see a breakdown of that momentum completely, and as such the price action will break lower and lower and lower. Instead of kind of moving sideways, it will start moving downwards. Now, why do we even assess that? My members, of course, are quite aware there is a bigger structure at play right now that is going on. Those who are familiar, again, with and understand technical analysis and understand that these harmonic patterns are not arbitrary and don't just happen every now and again just because. Hi, Shalom, good to see you there. My brother from another Canadian mother, Russian Canadian. Good to see you there, brother. I sent you some fun stuff, Alex. I hope you've seen it. And I've seen all the fun stuff you sent me as well, brother. Now, so we are looking at a broader like head and shoulders structure. This is also very much indicative. This very momentum that we're seeing on the weekly scale, what you need to understand that when we're looking at the weekly scale, we don't just look a week out. We are looking at the momentum and the process that is currently occurring on a weekly scale, which means we are now going downwards on weekly increments. We can assess that this trend is not over with. In fact, we can usually understand that from the bigger, broader picture, because if we are truly going down, at least the bigger picture says that we are. That smaller time frame, in our case, since we're looking at the weekly, our monthly, and then in reverse, our weekly, should be representative of more so bearish price action, confirming the actual move down. Now, let's say I'm completely wrong, and we're not really going down to the lows that I'm going to present, which is roughly about 6,000, 6,100. Let's say we're just going to stay within the framework of the current channel. And as you can see, the moving average channel that has been established and has been confirmed for a very long period of time. In fact, we've been sort of testing back in and out of this channel. As you can see, this is the shorter range channel. We are right now revolving around the tops of both. We already tested the median, so it does confirm the broader picture. And now what you can see that we're basically doing in potential is that we're moving to that lower band, or maybe the near tier, which is roughly around 6,800 at the very least. At the very least, of course, we can't assess it to happen straight down. Why do we even think so? Remember, because every little click right here that we take downwards, right, is basically another week, another column, another candlestick. As we can see, these incremental changes on the weekly average can be quite broad, and you gotta look at the entire length and size of the move, because you got to consider that although these tops are represented in wicks, not weeks in terms of time, but wicks like a candlestick wick, and so the actual movement persisted quite deep, and these movements on the weekly increment can be anywhere between 3 to 4 to 5% on the actual picture of what truly happened within that time frame. In fact, you can see this probably should be closer to 5. In this case, it's 4.44% exactly, precisely. So as you can see, these incremental movements are not out of the realm of possibility for this sort of asset. The S&P, we've seen it do these sort of movements quite a bit. I hope that was not hidden around the corner, just behind the layout. 30 minutes till SPX goes to the moon. Of course, of course. Jokes aside, Arnold and I have seen fun things like that do happen, that the price action goes completely sporadic and insane within the time frame of the last 5 minutes of the market of the day, because sometimes the market can spend a long period of time, so to speak, getting charged with liquidity, and then eventually the precise point in the price action happens, and then the market reacts to it. And the market doesn't really care. The market doesn't really the major players in the stock market do not time the market. They execute based upon a checkpoint, or if you will, a coordinate, which would treat the price points, as coordinates in space to recognize whether a certain action has been complete or not. So what I was saying, basically, the broader picture here, on the monthly, since we have only 16 days left of this month, of course, not all of them are trading days. We know we're going to have some days, we're going to have less than 16 days left in actuality. And so we are very, very close to completing this month that appears to be moving towards a crossover between the forces, implying that we're about to become more so bearish. It's not like we were full on bullish until recently. We were basically just squeezing the leftovers of that bullish cycle, that within the framework of the change back to the back end of the cycle, which is bearish in its nature, fully bearish. In fact, if you will look at our quarterly, we know right now we kind of are seeing a convergence of the forces, but more so all it requires for us to continue and become more so bearish, and we know we are in a new quarter, is exactly what we just were discussing a second ago: bearish momentum on the smaller time frame. So on the smaller time frame, since we are seeing far more indication of becoming more so bearish, again, the flattening of the curve, in fact, the curve is, as you can see, steepening inwards, we have this assessment, or at least I do, based upon the current structure. In fact, a strong technical support level that we have tested before. I'll show it to you right now. Something that was identified a while back. As you can see, there is a strong level hidden right here. I'm going to go deeper, just kind of show it, how it was tested multiple times and acknowledged quite a while back, right here around the beginning of the year. Basically, we've acknowledged these levels. These levels will probably play a role as we continue downwards. These are very strong levels that we have created. In fact, we have more so another strong level that goes diagonally and crosses over right through. So there are multiple sets of diagonal downward trends that have been already established. As you can see, the dotted line represents one of them. For example, this, and these two periods. The deeper we're going to go, the more clearly it will become that this level was established and acknowledged. And so we have an assumption, a logical assumption, to think that when the price action will continue downwards, it will retest these levels. So we are kind of looking at the continuation of this trend, arguably looking at roughly around, because it's going to take a little period of time, we're roughly looking at, as you see, something I presented before, 7,100 give or take. Sorry, I'm back and forth with the chat because the chat is completely on the opposite side of my screen. Everything is behind, so you guys can see. Yeah, now you guys can see what I was trying to show. Basically, a little bit of the divergence of the divergence of the expectation of what I truly expected to have by now, irregardless whether the price action sort of prolongs the process, or the market makers do. It doesn't prevent the bigger cycle, the bigger structure playing out. In other words, the market can move sideways temporarily instead of breaking out higher, Although it doesn't mean, I'm not saying we can't have any higher highs temporarily so, but the larger picture, the broader picture that we're looking at, as we start to see it sort of starting to appear more severely so on the weekly, and as that weekly bearish momentum will play out more and more and more into the following weeks, as we say, because every little increment is a week, basically, in other words, more of that bearish momentum will spill over into our monthly. The broader picture will affect it. And so once this crossover happens and we become more bearish on the monthly view, you'll have a lot more traders, a lot more parts of the market itself to be incentivized to think that we are going down rather than higher and liquidate themselves. And their liquidation will amplify that effect and will increase the move downwards. And so will complete what my assessment is for the current harmonic pattern, is basically a head and shoulders that will tether and will test these support resistance levels that we say before. Of course, there is possible slippage beyond these levels, so we are saying easily slipping pardon me, all the way down to 6,000 when complete, right? Because the current support level roughly resides at 6,100. But we understand that the longer this whole process takes, the higher the likelihood of, instead of it being the support level here at 6,100, as you see marked on my screen, end up being 6,000 simply with regular slippage. Another thing we expect post that drop, there will be a shoulder right after it, and that shoulder can exceed this high, this 6,666.66 high that I'm expecting. It is simply a very strong support and resistance level we have acknowledged and tested before. I'll show it to you a second ago. I know it kind of disappears when we're in the bigger picture. Then it sort of combines all the price action of that period all together and, well, makes it too singular. Now, if you look on the 4-hourly, you can identify how the price action very clearly acknowledged that level once it was around it. And whenever it did fell back around, it revolved and respected that very same level again. In fact, the deeper you go, the smaller the time frame, the more you're going to see how precisely the price action acknowledged that very precise level. All right, so the more deeper you look, the more deeper you're going to see the precision of the market revolutions around these levels, especially the psychological ones, the ones that persist. You see, as now we're at 30 minutes, now it becomes tremendously clear that whenever the market stumbled upon this level, it was extremely strong. And so the market simply acknowledged it by revolving around it, stopping at it, retesting it, and so on and so on. Of course, that's not the only level. Sometimes it's more precise than other times. Sometimes you got to acknowledge the slippage and so on. And yet you cannot sort of disagree or try to pretend the price action did not acknowledge that level. I would love to go to the 1 minute and show it, but unfortunately at 1 minute, and even on my premium account, it will not allow me go that far and actually show it. So I'm showing it as deeply as I can. Now, and so you got to understand that on the way back up and down, in fact, as we're gonna probably be moving downwards still, as I said, we will end up testing these levels on the way down as well. That's 6,666, not because the market is full of Satanists or anything dumb like that. It simply is a psychological level and something that sort of pops out and I guess feels highlighted for the naked eye, for the average Joe. Do we have to acknowledge and test it on the way down? No. Sometimes we even have gaps of actual rallies that plow through the level, and so we may end up plowing right through it. But the harmonic pattern, which is the head and shoulders expectation that I'm having, irregardless whether we're going to exceed that level and test other levels that we've created along the way, as you can see, kind of certain highs that I was trying to pinpoint and say that we may test these, we still probably will acknowledge that 6,666 one way or another in one direction or another. It does not happen to happen here, but it will most likely happen on the way back up. Now, this wave will be extremely misleading, and everybody will think, oh, look, we're finally going up. We've seen this before. It was just a mere correction from now on out, to the moon. This wave probably will be as strong as it will require of the market makers to convince the average market participant that the market is actually bullish. And once the market participant actually buys into it, roughly around here, of course, there will be a short period where they'll get to enjoy their pseudo profits, and then the market will break down and collapse, creating that harmonic structure that we already are seeing or forecasting based upon the long-term duration of the momentum. Because if we're looking at that quarterly and truly think it's going to break down. Now, I know there is some hesitation of some people. Well, Greg, there's crossover here, this and that. This is why in my academy, actually, teach to use other tools other than this tool that we're using. The RSI is more of a simple tool that shows you almost like a very basic speedometer of the broader momentum acceleration and deceleration. Once you are familiar with the cycle and understand that there are stronger forces at play that determine whether we're going to continue up or down, in fact, you realize how detrimental and how indicative this very turn is. Sorry, my camera just went bananas as always. Of course, having camera issues, no big surprise. No, stopped me at the froze my face at just a perfect thing. Hold on, let me try and fix it. Let's see if we can fix it. But basically, you're getting the broader picture of what I'm trying to say. And this is exactly what I'm trying to say. The broader picture of things is that the market is now slowly, very, very slowly, almost being like a gigantic tanker turning around. And that turnaround, unfortunately, is or has bullish internals in it. It does not mean that the broader picture, the broader market is not yet becoming bearish. In fact, we are seeing very strong signals of how it is exactly becoming bearish. The joke is actually when it will become absolutely clear, you'll have all the people who are now screaming to the moon saying, oh, remember, I told you so, when they didn't say anything remotely resembling, a correction. Those people are swayed by the market flow, just like the average Joe. If the market has been moving up, they tell you the market's gonna go up. If the market's been moving down, they will eventually capitulate and will adopt that bearish sentiment and will start saying how everything is going to go to zero and so on and so on. We don't do that. That's the beauty of knowing technical analysis, and that's why I highly advocate joining my community. Again, join through the Patreon. You have the link up there. In fact, I do have several open spots for my one-on-one academy where I teach and tutor people how to do that very analysis process, how to use these various analysis tools, and how to understand where the market is moving in one direction or another in the broader picture of things. Because people like to run around and scream, I'm an investor, I don't care if the market's going to drop 50%. I've seen how people react when the market drops 10%. I can't really say, since I've been in the market since a particular period of time, that I've personally seen how people react to the 50%. I have, of course, before me working in the industry, but sort of as an observer, externally, third party, but now being as a part of the industry for many years now, an account manager, an analyst, I can tell you, I understand exactly how people are going to react when we're going to near 20%, let alone 50. And yes, my assessment and analysis of us dropping back to 3,300, which sums it up at roughly about 55% correction, still stands exactly as it stood. Not because I want to, but because this is what the technical analysis shows. And those who know the technical cyclicality that has been at play for pretty much forever in a bit since the market is in existence, knows that the 100-year cycle is very persistent, the 30-year cycle is very persistent, the 10-year cycle is very persistent. Yes, they have their own deviations and standard deviations in terms of time, and in fact in price as well, but even that lemon can be squeezed eventually, and it usually does. If you look at the cyclicality of the market, you're going to realize that we right now are or have been already within the framework or a period of time that is considered very dangerous. Why? Because if you know how to count and you know about the cyclicality and you know where it starts and where it potentially ends, Not gonna know precisely the day, week, month, whatever, long in advance. But what you will know, you'll be able to recognize these periods and points in the broader market where we enter a significant change in directionality and cyclical turnaround and correction, which is very, very important because these corrections are broad and can be very punishing. In fact, the average consumer does not recognize how punishing these corrections can be until he experiences them on their own skin. And unfortunately, because they don't possess, the average consumer does not possess these technical skills, they do not recognize these things coming a mile away. And that's the sad thing is that I was saying earlier, that in just a little bit, people will be crying, how come the market didn't give me a private notice, didn't send me a private email, and so on and so on. People like myself and many others have been warning for quite some time. In fact, it's quite amazing how far out, relatively speaking, if you kind of broaden your horizons, you understand it's not that extreme, the slippage we had in this cycle. It's not all that extreme in reality, in fact quite standard. But for us, the everyday Joe, so to speak, that observes the market on a daily basis and is swayed and thrown around, threshed around by this ebb and flow, the daily fluctuation of the price action, and is convinced by the current directionality that that's it from here on out to the moon, or that's it from here on out to zero. And unfortunately, that's the sentiment that people are forced to have simply because they don't know any better. That is the beauty of technical analysis. It truly arms you with the technical skills, with the tools and capabilities of measuring and understanding and deriving the mathematical outcomes of what the structure is telling you right now, rather than trying to argue with it and superimpose or impose your gut feeling onto the market, which never works. In fact, one reason why you're probably, those of you who are, smarter, sharper, so to speak, are attentive to people like Greg Abel of Berkshire and Hathaway, who's replacing Charlie and Warren. And he has been taken to that position precisely for that reason, because he understands the broader cyclicality and not be, having itchy fingers while having a lot of capital to deploy in potential. Those who understand what I'm talking, know what I'm talking about, understand exactly what I'm trying to pinpoint and highlight here. And unlike Greg and others, of course, I'm not going to talk about Burry because I think Burry is somewhat off kilter. I think Burry thinks we're in a completely different place in the cycle. That's why he's assessing an 80% correction, which will happen at some point later, far later down the line. I'm assuming roughly around when the SPX will be hitting almost double its current price. Yes, we are talking at 15,000, so 15, 16-ish, basically. So twice the current price in many, many years from now. In fact, at that point will be established. Then we're probably going to have that deeper correction. It doesn't even have to be 80%. It can actually be roughly between the low 70s all the way to the high 80s. I really still think it will be revolving closer to 80, simply because that's how the average plays out. Wink, wink. Those who know about the cycle know exactly what I'm talking about. Pardon me for letting the screen go dim. I was talking for too long. Yeah, long rant. But you guys know I haven't been going live for quite a while, and we've been waiting for that correction for quite a long time, and I decided it's just gonna be boring for me to make another video saying the very same old things and showing the very same things. I just kind of decided to make it a little bit more dynamic and sort of on the run. I know many of the members who were here in the live in the beginning probably has already left and went to watch soccer. Yeah, I hope you all enjoy the game and all that, although am not into soccer. I used to love hockey when I was much, much, much younger. Nowadays, I don't waste my time on sports. The best sport in the world is the brain sport, and that's the market. I love that. There's nothing better than that. So, yeah, that's it. That's all I wanted to say, boys and girls, real quick. If you have any questions about the S&P or anything I've just presented in this video, feel free to ask. If any of you are still left here, hey, Greg and crew. Pardon me for taking so long to acknowledge the chat. I was very preoccupied with explaining my assessments and analysis with the market. I hope you all are not too preoccupied. Next time when we're going to do a live, I'm going to try to do a little bit more of these. One of my members, Andrew, were just saying on the Zoom call we had the other day, on the Discord call, how much he enjoyed me having a camera on again. Have a great day. All right, Leo. I see you got to run. So I'm gonna try and do more lives. More of them, of course, will be with the camera on. As you can see, it is kind of temporarily fixed. I call it temporarily because that's Canon for you. I may be gonna consider, consider contributing to the community or joining the academy so I can replace my stupid Canon camera that causes issues from here to Timbuktu and all that wonderful stuff. Otherwise, yeah, there's not much to say. Just kind of be patient, ladies and gents. The market has gone flat as before. Just as before, I predicted a drop, and unfortunately, I was already seeing the rally higher. This time around, I'm seeing, okay, we don't move that. Something similar is just that this time around, the low will be a lower low. And so creating that neckline for that head and subsequently head and shoulders that I'm talking about, or potentially this way. This is just a general guidance. I'm not trying to say how long it's going to take. I'm just kind of stretching it out to show. In fact, sometimes I can draw something dropping right immediately like so, or even these arrows that you can see right here on the screen don't necessarily represent the actual location where I expect these things to happen, because we don't measure time. We don't try to time the market. The market can take its sweetest time, so to speak, and do a very sort of prolonged process. It doesn't have to be this steep, or rather yet it can drop, correct. Internally it will have its own sort of internal movements, the inner noise, the inner movements, the movements that are on the day scale, not just on the day scale, on the 1 minute scale, the things that we observe, that ebb and flow that I was referring to earlier. So it will look like so, and so there, even internally, just this one limb will not be just going to be a downtrend, and nor do I expect it to be precisely here. We're just giving general guidance on the flow of the cycle, not and various support, and of course reaction of the market, the price action to various support and resistance levels. Yeah, that's it. That's kind of what I wanted to say about that. For those who still were here to watch this, I highly recommend joining my my Patreon, my Discord, so you guys can enjoy the community and learn more, because just to kind of show off a little bit, my community members were already always in the know about these things, ranging from my academy on the advanced level. Now I'm not going to show all the deeper secrets. Of course, I post all the geopolitical stuff and show kind of how things are changing and progressing on the go, at least especially on the weekends. And more so, I post charts even here on the casual chat as well. Hang out with my members as well. Yeah, sometimes. Damien, shout out to you, beautiful legend. Yeah, so post charts, talk about these things. There are discussions. I myself make fun of how everything is, at least for us, highly predictable, and even these geopolitical events are arguably highly reactive, and kind of, we are very well familiar and accustomed to expecting certain things to happen. In fact, for example, you can see here already quite a while back, I was warning my members about the very same price action, the very same thing I'm warning you all about. So my members are always first to know. Just the one good reason why to join the Patreon, and definitely another wonderful reason why to join the broader community and Discord and so on. All right, so I love you all, and I'll see you on the next one. Hopefully my hair will look a little bit better next time. It looks crazy, frizzy. Anyway, boys and girls, love you all. See you on the next one. Bye bye.